Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, May 18th, 2018. First of all, if you could hit the like button and also subscribe to this YouTube channel, that would be great. I'll really appreciate it. So we'll look again at stocks. Today we'll cover some of the emerging markets. I don't normally trade them, but we'll cover them in relationship to US dollar. Treasuries, investment grade bonds making new lows. Junk debt is still moribund, and this could be problematic for stocks. We'll look at some forex analysis and some of the major currency pairs, and then at gold as it kind of gets sold, as I was predicting. Oil and energy moved to 52-week highs. We'll look at natural gas, and we'll finish off with major cryptocurrencies. Okay, let's continue, or rather, let's start with S&P 500. This is S&P 500 Etf Spy, ticker symbol SPY. So on this chart, several things are going on. Generally speaking, again, this chart is bullish. Why is this chart bullish? Because on the 26th of January, right here, this is a all-time record high, and now a normal-looking pullback occurred in February. Several bounces. Basically, we're still range-bound. No fresh breakout to fresh highs yet. Again, this is a bullish chart, so I would be expecting a breakout to fresh highs. Hasn't yet occurred. On this chart, what I wanted you to see is this four indicators, four lines rather. And notice that again, these four lines you can find out more about them at MasterChartsTrading.com. These are my proprietary lines that I programmed in. You can see the indicators here, and they show really pretty good places to buy and sell. They're like support resistance indicators, basically. So notice here that the yellow line here, which is a kind of like a line in the sand and the end of the bull market, if we see a close below it, normally this would be like the end of the bull market for stocks if we close below it. Anything above it most likely is still a bull market. So right now I'm still looking at this chart as a bull market chart, I guess. So notice that these lines, the indicator lines, are number one, curving up. Number two, they're narrowing. So you can see that the distance between the green and the yellow lines here is about 12%, 12.5%. But if we look just a few weeks ago, you can see that the distance between these two lines was actually around 14%. So what this means is that the trading range is starting to narrow, and the more the trading range narrows, and I can show you a really narrow trading range. Here's McDonald's, for example. Notice how the green and the yellow lines got really close now, versus back here you can see that the lines were really far apart. So what this means is that the price now has less distance to travel towards the bearish levels. And the bearish levels here around red line, which is 257 currently, I start to kind of seriously start to worry. And here around the yellow line, I just outright don't want to touch the stock, or I want to look for opportunity to sell it or to short it. Currently, this is still a bullish chart because we haven't closed below either the red or the yellow support resistance lines. So we are still in a bull market for this security. But again, since the trading range has narrowed, now the price has less distance to travel towards the bearish levels. Here back in, actually even as early as just a few weeks ago, the trading range was wider. Now, again, the trading range is narrower. But keeping an open mind, I think the stocks are in a bull market still. Here's QQQ. Yeah, we're approaching fresh highs. This is again a bullish chart, so I would be looking to buy. And previous alerts, here's one on the 6th of February, another one on the 26th of March, another one on the 5th of April, and they were all successful. The latest alert was sent as a limit to my subscribers, and so far the price hasn't come down, but it's possible for it to come down to about 163. I think it's a decent opportunity to buy at that area. IWM, or also known as small cap Russell 2000, came up and pushed to fresh record highs. So again, this is an unequivocally bullish chart, and notice previous alerts here, and they were all successful. Even this alert back on the beginning of February, if you let it fluctuate and if you put your stop far enough from the price action, and I usually put my stop for equity, for stocks, or for stock indices on close below the yellow line. In other words, I am, if or when the price comes down to basically fresh lows, that means that the trend has changed. It is different for Forex, and once we get to Forex, the currencies, I'll show you that for Forex, I think the line in the sand would be this red line and the blue line, so that would be like the trend setters. For stocks, I give more leeway to the bulls, to the upside, basically. So overall, I think the stocks are bullish, and we're still, in a bull market, so we're expecting fresh highs. But you can see that the trading range has narrowed, so it's possible that we will retest 257 even. It's possible, unless we break out to fresh highs. All right, let's continue to emerging markets, and this is a little bit of a in-depth coverage. So we have, first of all, we have the EEM, also known as Emerging Markets Fund, and this is a very highly traded fund, so there is a lot of volume in this. So this is a really great indicator looking at the emerging markets. Now it is capital-based, cap-based index. So in other words, capitalization rather based index. So China, for example, accounts for a large percentage. We can actually look up EEM holdings, and we can look up what accounts for what. So China, for example, accounts for a relatively large percentage of the portfolio. So, for example, China is 31% of the portfolio. So let's look at China first. And here's China, FXI, large cap index. I think it's a pretty good representation of the Chinese stock market. Generally speaking, again, this is a bullish chart, very similar to S&P 500. You can see very similar pattern, fresh highs here in February or the January, and then basically a trading range since then. But I would right now still trade this chart on the upside. I would not short it or avoid it yet. But again, notice that the trading range is narrowing, so the price will have less distance to travel towards the bearish levels. I don't trade this one that much, but with these indicators you can basically trade any security. So find out more about them at MasterChartsTrading.com. South Korea, EWY, looking also pretty good. Again, I would be buying this chart, and again, notice how narrow this trading range is. See how between this green and the yellow line, it's like 11% here, but back in March, this was a 17% range. So the trading range has narrowed, and once again, if we see this is equity, so if we see a close below this yellow line at 67.68, 67.99, then I would consider this particular chart bearish and I would look to avoid it. But for now, this is still a bullish chart. Taiwan, EWT, also not as strong, but still a decent looking chart. So again, notice how prices came down below this red line, and the reason why the price was able to push below this red line is because of the narrow trading range. Again, notice how narrow the range is here, only 9% versus just a few weeks ago when it was like 12% or so. So overall, still a bullish chart, but again a narrow trading range, so it could go either way. So this four or the three countries, the China, South Korea, and Taiwan, they're looking okay. If you are, inclined to trade them, I don't really trade that much foreign equity. The reason being is because of the currency risk. So if the currencies are, in addition to the stock market fluctuating, you also have the currency of the country that you're trading, which is fluctuating. So this puts another dimension into analysis, and sometimes I just don't want to bother with it. So sometimes I just want to basically look at the chart and not worry about the currency impact. So some of the laggards, we can look at India. Here's India earnings fund. Notice where the price is. Price is basically approaching bearish levels. Could potentially, if we close below this yellow line at 25 bucks, then I would probably look for a rebound to around 26 and short it there. So far this hasn't happened, but it does look like it wants to get there. And here is US dollar versus Indian rupee, and notice that US dollar just killed the rupee, and it makes sense for the money to be outflowing out of the India fund because of the currency fluctuation. So again, notice that it's more complex to trade foreign equity. South Africa, EZA, also not doing great, not as bad as India, but notice we're again touching this cautionary line around 63. If we push lower, then I would, if we close, especially if we close below 58, then I'll definitely avoid it. Russia, RSX, and this one is, had a humongous gap here on the 9th of April 2018. Notice we closed below this red line, sent a caution to my subscribers, and I wouldn't normally trade it, but I did send it to my subscribers if they were trading it. So right now this gap is still semi-filled. There is still a little bit of room here. This is not an outright bearish chart, but I think if resistance reaffirms itself around 22 bucks, then a push lower we could see fresh lows on this fund. And finally Brazil, and this one just got slammed, most likely again due to currency fluctuations. Likely dollar is gaining versus Brazilian currency, which let me see, US dollar, Brazilian real, I guess that's the one. Yeah, notice that US dollar gained strongly against the real, and this is affecting the stock market in Brazil as well. So it sort of makes sense. So overall, emerging markets doing okay, just sort of trading in a range, but once again, because of the narrowing trading range, we could easily see a push into the bear market. Will this overall think than the worldwide markets. It's difficult to say. The most important chart, I think, is this one, S&P 500 SPY. And this one, if we get to bearish levels, then we will act accordingly. But for now, we're looking at bullish levels, and we're looking to buy this chart. All right, let's continue to treasuries and investment-grade bonds and bonds of all sorts. So first of all, let's look at TLT, my favorite indicator of the bond market. This is a fresh low on the 17th of May this year, 2018. This is showing a bearish posture. Bearish posture, I would say, started as early as 1st of February, but definitely as early as the 8th of February. And then from this point on, we're basically just changing our mindset. We're no longer looking to buy, we're looking to sell on a bounce. So, for example, here around beginning of February, we have decided that we no longer want to be buying TLT or this particular instrument. And here we started thinking, I want to sell it. Where do I want to sell it? I want to short it, maybe with options or maybe with a inverse ETF, such as TBT. You can use TBT for a retail level. In fact, I did a trade here. So TLT, basically we're looking to for a bounce and then short. So here are a couple of great opportunities above the support resistance lines here, which is a red support resistance line. Currently it's at 121.14, so another decent option is to short at at aggressive levels at around the yellow line. And notice that this short on the 27th of April would have worked just fine, because notice we had a move lower here. But this is an aggressive level, so if you're an aggressive trader, then definitely go ahead and try to short here. But I'm again lately more of a conservative trader, and I'm looking for a deeper fluctuations, and I would look for a shorting opportunity currently around 121 or so. Overall, stock market or the bond market, AGG, fresh lows. Maybe oversold. A bounce probably is gonna materialize to like 106 or so, maybe even higher. But again, this is a bearish security and it should be shorted. LQD, also investment grade corporates, corporate bond funds. See, again, this is a downtrend, and where do you short it? You short it at good support resistance levels, currently around 115 for an aggressive trader, or around 116.5 for a conservative trader. Junk bonds, same thing. Here, on the 2nd of February, our minds have changed, and now we're no longer looking to buy, and we're simply looking to either short on the rebound, which is my preferred option. So there's the rebound. For example, the 21st of February would have been a great opportunity to just go ahead and open a short. Nice move lower. Another opportunity, I would have shorted probably on the 19th of April on breakdown below this red line, and then you see a nice move lower as well. So junk bonds again worry me quite significantly, because junk bonds correlate highly with the general stock market. Here's that chart I keep showing. We got junk bonds in blue, S&P 500 in red, so correlation are high. In other words, they move. These two funds move in lockstep, and if stocks decide to, or rather, if bonds decide to continue lower, perhaps junk bonds will follow. Or rather, if junk bonds decide to continue lower, perhaps stocks will follow. Right now, there is a divergence. You can see that junk bonds are approaching fresh lows, while S&P is actually approaching fresh highs. So, who is correct? We are going to find out soon. Alright, let's continue to the Forex analysis. Here is DXY, the dollar index on the daily time frame. You can find out more about these 4 lines on the chart, these horizontal lines, at MasterChartsTrading.com. These are my indicators with which I trade. They show decent support and resistance lines areas, and additionally it shows a bias. Am I buying this chart or am I selling this chart? So here's DXY, the dollar index, and up until quite recently there was really no doubt in my mind that this is a bearish chart. So here's, for example, as early as March 2018, we can still see a downward facing arrow, so this would have been a decent shorting opportunity, which would have worked out okay. This is again aggressive shorting levels. My preferred shorting levels would have been at the red line. So now we're seeing kind of like this bouncing around and a higher low, another higher low, and then now a higher high. And then you can see that we're seeing a push higher. So for example, here's a close above the support resistance at 92.46 here, and a continuation higher, yet still. So this is a encouraging price action for the dollar bulls. Ideally, we should see a breakout above around 94.5 or so, 94.26 currently. In other words, a close above this level. And then usually, but not always, we can expect at least some move higher if we see a close above this blue indicator line. So let me show you a couple of examples what I mean by that. So for example, here's US dollar versus Mexican peso, USDMXN, and this is what I'm referring to right there on the 2nd of May this year. We see a close above this indicator line, and I would have just bought it like next day right there at around 1905 or so. Nice move higher there. Here's USD versus Swedish krona, same thing. Here's that breakout on let me see when this is, on the 25th of April, and a nice move higher. So this is the kind of trades I'm looking for as of late. Euro versus US dollar, also nice big move here. Notice there is a close. I'm gonna zoom in here. On the 2nd of May, we see a close below the support resistance line, below around 1.19 or so, and then on the next day we attempted to rally above it but failed, and then continued lower. So very close to bearish levels. Bearish levels for me would be 1.1657, so this line right there. In fact, if we see a close below it, then most likely it's going to be in a bear market. This hasn't occurred yet, so we'll be watching for a breakdown or potentially a reversal higher and continuation higher. For now, this is still a bullish chart of euro versus US dollar. But again, if we close below these levels here, about 1.16, then I would consider it a bearish chart. British pound versus US dollar, same thing. There's that breakdown on, let me see, on the 1st of May, and then see a continuation lower, and now we're approaching bearish levels at 1.325. Same thing, if we see a close below those bearish levels, I would consider shorting it. US dollar versus Japanese yen, big strong move as well off the lows. In other words, US dollar is winning the battle. Notice how it's approaching this blue support resistance line, and so far this is a rejection like candle. So notice the price came up above the support resistance around 110.9, and then so far sold off. So not yet a breakout, but definitely getting very close. So we'll be on the lookout for a breakout for the Japanese yen, or rather in this case a breakout for the dollar versus Japanese yen. Let me see what else. US dollar versus Canadian dollar. Now so far probably no breakout here. Notice how the price touched this blue indicator line, really just touched it and sold off. So if we see a close above 1.298, then I would say that this is a bullish chart. In other words, the dollar will be winning the battle against the Canadian dollar. AUD, USD, Australian dollar versus US dollar. So there's the breakdown on the 23rd of April, and just a straight move lower. So basically at this point we can just buy, or rather sell this security. NZD versus USD, New Zealand dollar. There's the breakdown on the 25th of April right there. Straight move lower, just immediately. Does it happen always? No, obviously not. But this is when it happens, it's really nice. So let me see what else I wanted to show. US dollar versus Indian. I already showed Indian rupee. So on this one, I don't really trade this, but if I was trading it, then I would say, okay, there's the breakout on, let me see where this was, on the 28th of February, right there. Breakout just means we see a close above the support resistance line, and see how it curved downwards here. That means the price had had less to travel to the upside. And here we see a breakout, and then basically a consolidation around this blue line, and then a big push higher. So I would have probably just bought this particular security here, and then just sat through this and then waited for this breakout. Finally, here's US dollar versus ruble, US dollar RUB, and this one is difficult to trade because it's not, I don't think it's part of all forex brokers interfaces, but overall this is a bullish chart for the dollar. We see a breakout on the 9th of April here, and then a push higher. If I was trading it, I would be looking to buy around the blue line. So here's that blue up arrow, and this would have been already enough to make this a profitable trade if you just had a limit buy at 61.38 or so, and then you can sell some already and lock in your profits. So again, overall, I think dollar could break out here and close above 94, and this would be quite bad for gold, which we'll get to in a second. So here's GLD, the retail equivalent of gold futures or XAU USD. If you listen to my previous videos, I repeatedly said that I'm not liking the action in gold miners, and I'll get in a second to gold miners, and by extension I'm not sure what's happening to gold, because gold is pushing higher, gold miners are pushing lower. Which one is correct? So perhaps gold miners are correct. And for gold, I would probably set a bearish trend setter at the red line. So if we go to, let me go to futures GC1 exclamation point. So here's gold futures. And if we get to 1266, if we close below 1266, I would think that this is now has changed into a bear market, and we will potentially short it there. For now, it's still sort of indecisive, and I think gold miners would be the ones to look for direction. So here is the gold miners GDX. I was kind of getting really worried about gold miners as early as February. Here I'm cautioning my subscribers. Late February, I outright said avoid this security. If you're a more sophisticated trader, you could short it on a bounce, and I would have shorted it at the red line here at around 2260. Depending on where you put your, or rather, if you're buying a put, for example, or if you're using DUST, DUST, you would have probably already made some money, especially this gap here between the 14th and the 15th of May of this year, still unfilled, and I feel like we could easily push lower here. If we push lower, then GLD very likely will close below this 120 level, and then I would say that we're in a bear market for gold. All right, oil and energy. So CL1 exclamation point. This is a light crude oil futures. These are fresh 52-week highs on the 17th of May this year. So bullish chart unequivocally. A pullback is very likely, I would say, to 67 or so, possibly lower, maybe into like maybe around $61 or so. If it even occurs, because sometimes you know, we're at fresh highs, and what happens next? We continue at the fresh highs. So difficult. I would not short this chart. I would not look for a top. In general, I would not recommend beginners or even intermediate traders to look for a top in a bullish security or a bottom in a bearish security. Because why? Because they can simply continue. The bullish securities can still simply continue higher. Bearish securities can simply continue lower. And there is very little way that you can tell if indeed the market that you're trading has topped or has bottomed. Usually what I do is I want to see a rollover, a bounce, and then I would short. So for example, this one I would not even contemplate a short, but for example, let me do FRT. This is a actually, yeah, this is a great example here. FRT. So you can see that we saw a breakdown, bounce. So I would be shorting here around the red line, and vice versa. If we are buying, you know, for example, S&P 500, you know, we have a bullish chart, pullback, we're buying, pullback, we're buying, pullback, we're buying. So this is the way I think about trading. Here's Energy XLE. I am rather alert was sent to the subscribers, to my subscribers here on the 17th. There's a very nice move here. About, let me see. So it's about, you know, almost 9% move. And this is a straight up breakout trade. So, you know, that's of late I've been liking this kind of trades, you know, on breakout. Again, this looks like it's been a bit overextended, but these are fresh highs. This is 52-week high, so definitely a bullish chart. Pull back to around 75, 90, maybe even lower to 72. But if we get, you know, if we pull down to 73, then this could be a killer opportunity to buy. We'll see. All right, natural gas, NG1 exclamation point futures. So do not analyze UNG under any circumstances. UNG, do not analyze it, or UGAS or some other ridiculous things. You know, they're there for trading. They're not for analysis. So you can analyze the futures, NG1 exclamation point, or you can do NGAS, which is a CFD, which is contract for difference, but they're very similar to futures because I think the contract for difference is based on the futures. So on this chart, I see a bearish breakdown on beginning of February, and here at the yellow line there are aggressive short levels. Again, if you're aggressive, then you have to probably be pretty nimble. Like for example, this trade on the 29th could have worked in your favor, but you had to really quickly take profits and cut losses. I'm looking more of a bounce to around $3, and then I'll look at the behavior of this chart and see if I want to maybe buy put options on UNG or just outright short it with DGS. For now, I'm just sitting out and doing nothing on this particular chart. All right, and finally, let's look at the major cryptos. So BTC, USD, Bitcoin versus US dollar. Bearish. The bear market, I think, began in February of 2018, February 4th, 2018. There's that close below support resistance. And, since then, basically, I'm looking to only short. I'm not trading Bitcoin or any cryptos, but if I was trading it, I would have put my stop well above the price action. Again, for this particular way of trading, the way I'm showing it to you, you need a relatively large account because this is a ridiculously expensive instrument. But you can also do ETH USD, which is Ethereum. Also bearish. There is that bear breakdown on mid-March, so you can see a short now basically around that area. Nice 40% drop afterwards. Notice where it bottomed, around the yellow line. Another short would have not yet worked out, but I would have shorted personally on the 25th of April here, again with a stop above this blue line. And it sure appears as if it wants to go lower from here, especially if we see a close below 657. I think we can see a nice move down. Finally, LTC USD, Litecoin, and this one already broke down. You can see on the 8th of May, you see already a close below 159, which is in this case a support resistance line. Again, the stop would have been around 243, and a move lower is already unfolding. Finally, XRP versus USD, which is Ripple. This one is just really weak. It didn't even get to this red line around $1.30, but I see a close below this yellow line, so maybe we'll see a fresh low after all. All right, that's it for this week's recap. Please head over to MasterChartsTrading.com. Hit the like button also on this video and subscribe to this channel. Head over to MasterChartsTrading.com. If you have any, by the way, if you have any comments, you can make comments on the blog page too. So you can see comments here. Click on the alerts and indicators, and then you can sign up for the indicators. You can get alerts from me. You can get alerts and indicators that I just described, and you can just get the indicators if you don't want to listen to my stuff. All right, if you have any questions, please send them in. Thanks for watching. Have another great trading week. Bye-bye.